What's up, YouTube? It's Todd Horst here with Taste Tracker, and I have another small account challenge update. Account is currently sitting at 1354. I have opened up a new position today in Qualcomm. I have $473 left in buying power, and the two existing positions that we opened up earlier in the week plug in Tesla. So the first thing I want to show you is sort of these figures. The 1354 is not the highest. On the 10th over here, I had logged 1391, so we're down about 40 bucks. But the important thing here is that the cash is up higher now. Cash back then was 1903, now it's 1973. So that is all of the amount of money, whether it's in collateral or accessible to us in buying power, that we have in our account. So every time you sell a spread, which is what we do here, then we collect that money, it goes into our cash. And this is a good indicator on how high the account could go if we held all of our positions to expiration and they were all 100% successful. So you can just roughly guess how much we're going to have in this account if they're all successful and we close at 50%. So right now we're sitting at 1,300. 1,900 is how much we've collected. So maybe around 1,600 is what we are shooting for when we close out of these three positions that we have on. So clearly I cannot get to $2,000 in my account until this cash value is over $2,000 and then some, because we're closing at 50%. Why do we close at 50%? Because that increases our success rate. Usually we can collect on the bulk of a move upward in a stock, and then we'll move on to the next stock. Once we hit 2,000, you'll see an increase in the activity in this account, and then 5,000 and so on. Each step that our account goes in, it gets a little bit more exciting and more entertaining because you can actually do more with the money you have. At 473, I have enough to open up one 5-wide position and maybe enough room to play with a 3-wide if I found a setup that looked good and had dollar-wide strikes available. Typically, I don't do 3-wides. I definitely don't do 1-wides because they're much less successful for me or profitable. So it's really not worth your time. But doing 3-wides is sort of an okay middle ground where you can actually be profitable and not totally waste your time. Okay, so that's it for the account page. Let's go over to the open positions. The new position we opened up was Qualcomm, which the Tesla, I consider that to be a March expiration, but it's really on a weekly, it's not on a monthly, and I had to do that for the purposes of to get the $5 wide. Check out a previous video if you're interested in that. Trying to think. I sold the 140, so that's important to know. That's the one we care about. We want Qualcomm to stay above 140. I collected 172 for that. Let's go to history. So we opened that position today, but what enabled that was closing the AMD position. That automatically closed using the closing order I set up at the time of entry, and it netted us $102. So that's really good. Normally I'm looking for it to open it for 160 and close it for 80. So this is $20 more than what I typically am able to collect. Let's jump over here at the Home tab. So we have the trend line here. That's how much percentage your account has increased that month. Obviously, because February's just started, we're much lower at this time. The red line and bars are for SPY, green are for us. So January SPY was actually negative on the month. It had a negative 1%. And so far this month, it's up 5%. So that brings the cumulative up to 4% for the year. And we can see us, we are at 29% on the year. So this is a great graph to know whether you're wasting your time or not. So you need to be entering all your trades and then to say, am I doing something right? Am I just not putting in enough effort or following the right people or the right tickers or using the right strategy, etc. If you're not doing better than SPY, then you could simply close out everything, dump all your money into SPY, and be more profitable. So obviously our goal is to be substantially higher than SPY, and right now we're at 30% for the year, which is typically a year is 7 or 8%. So, hitting 30% each year would be totally fine. So far this month, we've collected $337. We don't have anything for January because that's when we opened the positions, and they took longer. They took that whole month before they closed. So I think that's all I needed to show here. So let's go over our positions. First, we have plug. We want to look at the 60 leg. All right, and the 60 leg is in green here, so we're still above that. We're below the 20-day moving average, which isn't great, but we are at this support here, and 50-day is catching up. I wouldn't be totally surprised if we come down here and get to about 55-ish, but at that point, we'll have filled this gap that was over here, and the 50-day will come back up here to support it. At that point, I would expect a bounce, if it even comes to that. MACD and RSI are already looking pretty good, and today was green, although there was light volume, but really I think this position is fine. As long as we're up here in this quadrant, we're good. So the next one here is Tesla 785. All right, again here, green line, need to be up in this quadrant, same, almost the exact same chart. MACD and RSI are ready to turn around at any point. The only plus side with this one is there's no earnings coming up, and there's no gap here, and we're already very close to the 50-day. So it did bounce off of my support line, but even if it does come down to the 50-day, that would be 750, and then should bounce up. So we should get a quicker bounce on this if it comes to that. So Qualcomm, this was brought to my attention by one of our members. Just goes to illustrate how important a community is. As long as you're a part of some community, it really, really, really can elevate your game, because it's just impossible to see everything that's going on in the market. So we need to be, we sold the 140s. So the 140s are way down here, underneath of the 100-day. So that gives us plenty of room to be correct. 100-day definitely should hold. And we can see MACD, RSI already curling up. So we probably could have even gone even more aggressive and gotten the 145. But there's no need to. Like I said, we collected 172. Again, I'm looking for 160. So the fact that this is that good of a strike and still getting that premium. I got the 41% in the money from Tastyworks. So I had both brokers up while I was putting on this trade. But that's right around what I want to be. I want to be at 40% in the money, around 45 days to expiration. This is 63. However, with March, sorry, this one's March already being 35 days, that's time where, like, getting down to 30 days is probably okay, but I really don't like putting on positions less than 30 days. It's just not enough time for you to get good enough strikes that both pay enough and are below significant moving averages. So the further out you get, you can get lower down strikes and still get the same premium. If it's shorter expiration, you have to come up on the strikes to get that same juicy premium. And at that point, you are very much opening yourself up to the risk of blowing through your strikes. Okay, so yeah, I think that's really all I wanted to say. I'm not going to show opening the position so you can see the previous videos. I think we've gone through that enough times, but certainly if you have any questions, let me know, and we'll leave it there. Thanks.